Hey everyone, happy Monday. I'm Tracy Williams with the War Group brokered by eXp Realty here in the Jacksonville, St. Augustine, Florida area. And I am here today with Joe.
Hey, Joe Versput with the two Navy vets mortgage team at Future Home Loans.
Talking about credit. We'll get to the market and kind of where we are in real estate. Talk a little bit about credit and how that plays into a mortgage. And talk a little bit about credit repair companies. Not all are created equal, just like all lenders, all realtors are not created equal. And who you work with does matter. So, Joe, you want to share a little bit about credit and kind of how it plays into the mortgage side?
Yeah, person has a different loan profile, financial profile, right? So, but the credit score plays heavily into your rate and fees of the loan. So you can look at it as a risk thing. The lower that your credit is, it's more of a risk to the person lending the money. So they take that and add it to the rate or maybe some origination. And then once you drop below about 640 for any of those loans that you can do, they really start to hit you. So we would rather, if we had the time, is to get a plan with your family and maybe do a soft pull or something that we can get a peek at your credit and get a plan to get that up to a more manageable payment. If it's an emergency, we can do credit in the mid 500s. It's just not as recommended, especially where rates are these days. So preferably we have some time to kind of groom your credit. If we need to send you to a credit repair person, as you mentioned, Tracy, we both have a few people that are not just trying to string you along for that monthly. They're actually giving us a pipeline report and telling you, hey, this client is now ready to buy a home.
Right. So I know that I have been asked several times, even recently, about credit repair companies, and everyone has a different type of system that they utilize. And one of the things I have learned is that all credit repair companies do not do their credit repair based on trying to help get you a mortgage. A lot of them are trying to refinance credit cards and all that kind of thing. And this time of the year, especially, a lot of people are looking into going with these credit repair companies, and they will charge.
They kind of lock you in a lot of times where it's like, oh, we're going to fight this for 3 to 6 months. And you're kind of locked out
Exactly.
of doing anything really. And if you don't have a reputable place, you could come out of that back that were coached into loan modifications incorrectly and it never got finished. And then their credit's just destroyed. So you really got to be careful. And really the first step is just talking to a mortgage advisor or a loan officer, mortgage broker like myself that has a lot of experience from very high end retail clients to people that are high end, maybe alone in the 550. Unfortunately, underwriting's harder. You might have delays in closings because they're just kind of banging you out and like around in the credit area during underwriting, where that could take just as long to close a loan with the higher payment. Then let's take 2 months and get you guys correct and then move forward with a better payment is kind of
Oh
where I would
yeah, all day
always
long.
recommend.
And that's exactly what, the first step to home ownership is a pre-approval. And we tell our customers that all the time, that is super important to do. And the reason is so that, it's just like going to the doctors, they want to see the whole medical profile before they make any recommendations. Same thing
Right.
as a real estate advisor. That's what we do as a mortgage advisor. That's what you do. And, a lot of these credit repair companies, are great for, just doing overall general credit repair. But if you're looking at mortgage, you need to talk with a mortgage advisor. And that's
Specific
always.
guideline. Yeah,
Mhm.
like FHA and VA have different collection payoff guidelines. Like one's $1,000, one's $2,000. Below that, you don't need to touch it. Medical bills don't take priority. There's just all these little things that if you're trying to do this on your own, you could really be shooting at the wrong target and just wasting 2 months of your family's valuable time and money, maybe,
And money.
And so, and then the other part of that is the rates now, so now it's way more important because everyone knows we're in a more normalized, maybe rate environment, but it's definitely higher than it has been recently. So having that play into your mortgage rate it really affects your buying power these days. And that's where coming as not only a mortgage advisor, a real estate advisor that work in tandem so that maybe, like Tracy, you can negotiate a point off the rate and I could do something that is more creative to help them get a more palatable payment these days.
Exactly. You used one of my favorite words, negotiate. I love it. I love it. I woke up this morning. First thing I did was negotiating a deal.
That's
So
awesome.
that is, that's really, really important to be sure that, they are talking with someone who is a professional that understands, especially not just mortgage, but looks at all of the different loan types, because there's such a variety of loan types, and based on credit, based on, there's so many pieces of the puzzle. And you can
Yeah.
do a pre-approval that is automated underwriting system that automatically, pre-approves them. But sometimes those lower credit scores will cause you to be in a manual underwrite situation,
Correct.
which does take a lot longer for, closing deals and that kind of thing. And so,
But it could cost
even
like
down payment assistance programs.
because they usually do add some to your rate. And again,
Mhm.
in this rate environment and the way homes have kind of gone up in value and rates haven't really dropped as much as we thought. In the last couple of weeks, they've gone down about a half to 0.7. But for time being, we're living in this environment. And so if you're using that down payment assistance, you're paying an extra 1% to 2% on most of those programs with kind of a payoff period. The market should take care of that if you keep the home for a little while, but maybe there's a family gift, maybe there's another option, especially if you're a veteran, you got a 0 down program. But we have a 1.0 buy down, which I like, which is it's a year at a percent lower, and if you decide to refinance, you'll get the money down that you paid up front to get that 1 year off. And you
Mhm.
could have the seller pay for that as well. So like in this kind of environment, Tracy, you might have more information that's more I'm kind of swerving into your lane here.
Yes.
But as far as it being a buyer's market is more now, and we're getting a
And
lot of seller concessions, rate buy downs paid for by the seller.
right. So good. Yeah. Transition there. So, in Northeast Florida right now, in all three, we service 4 counties, Duval, Clay, Nassau, and St. John's. And here in Northeast Florida, we are still seeing a buyer's market. And, we have had, some decreases in the market action index, which indicates that it is still moving towards a buyer's market. And that is because of the interest rates, I believe. But in one county specifically, it's actually moved upward, which means it's moving more towards the seller's market. And that's Nassau County. And I was really surprised by that. Market just has, increase. It's actually up. I was looking at some statistics, National Association of Realtors, and it actually buyers are up 8% from last year, but we are still down 6% since 1981, which is seeing that 87% of buyers are actually buying resale properties. And what I mean by resale properties are properties that have been previously owned.
A nice resale home that's been lived in and you got a warranty with it, maybe in the contract, something like that. It's
Right.
really in an area that you prefer.
Yeah, absolutely. So, only 13% of buyers are actually buying new construction. And even though the new construction have, some lower rates that they're doing that, but, they did that bulk purchase of rate buy down. And,
Yep.
so they do have access, through those, and they're paying off some closing costs. But at the end of the day, we are seeing that sellers are willing to give up some of those concessions right now. So,
Yeah, it's been 7
right.
to 7.5 to 8 at times for the last year now, right? Because
Right.
we're in November, that large rate thing was in November. So now
Right.
we've lived with it for a while now. Some of the buyers are starting to maybe say, okay, well, I've got to do something. There's little refinance booms here and there. We'll cycle through those before there's maybe a substantial large rate drop, which who knows? You just got to make sure your family's comfortable with the payment at the end of the day and not get lost
Yeah.
in the sauce.
Yeah, exactly. Well, and that's, for the fact that even with our increase, that we are still below what we had in 1981. And 1981, the interest rates were 17 and 18%. I remember
Yeah, those payments
because
were high. I mean,
my parents bought new construction back then in
yeah,
Jacksonville.
but they bought it for what, 35,000 or something?
Yeah.
I mean, but the payments still with that rate were higher. And
Ex-
circle back to let's get a financial plan for your family and let's see
yeah,
what in today's
exactly.
environment. And then when everyone's comfortable, let's go ahead and shop.
Right. And that's the main thing, is just creating a plan. So thanks, Joe. I appreciate you being here today.